So we were off last week due to the market being closed, but there was some news that cycled through, and it is directly relevant to a company that we've talked about here a few times on Industry Focus. Listeners probably recognize the name Ellie Mae. We wanted to give this a quick look just to make sure everybody caught this. But Ellie Mae, the mortgage software provider, has entered into an agreement to be acquired by Thoma Bravo, which is a private equity entity that is going to buy Ellie Mae for $99 a share. That's an all-cash offer. And, I've had Ellie Mae as one to watch for a number of weeks. It's a stock I've owned, still own. This is a little bittersweet, Matt. I'm not going to lie. I mean, it's always nice to realize gains on our investments. On the same token, I kind of wished we could watch Ellie Mae run a little bit further, but it looks like Ellie may be leaving the public markets and becoming a privately held company here soon. What did you think when you saw that news?
I was happy for you.
Well, thanks. Thanks a lot. It's very thoughtless of you.
It's always, credit where credit's due. You've been suggesting that. You got it on my radar. Yeah. I wish I had listened to you and bought some shares.
I said thoughtless. I really meant thoughtful. I was just giving you a hard time.
But one thing I would like people to know about this is the deal could get even better. Normally when an acquisition offer like this takes place, I suggest that people sell the stock. You're not going to do much. The offer that it was made is for $99 a share. So the stock is trading right around $90 a share as I write this. I'm looking over there. It is 98 and some change right now. So it may seem like a good idea to just go ahead and get rid of the stock and move on to something else. But like you said, you're holding on your shares, and I bet I can guess why. There is what's called a 35-day go shop provision in the deal, which allows Ellie Mae to try to find an even better offer. So it looks like the market's somewhat pricing this in. So if you hold on to your shares right now, worst case scenario, you're going to get $99 a share, which is exactly what they're worth. So there's pretty much, unless you think that there's going to be regulatory obstacles to this deal going through, which I don't foresee at all, then you're going to get your $99 back. And there's always the possibility that somebody could swoop in and try to acquire them for a higher price. So very little downside here with a lot of upside is kind of my take.
Yeah. I mean, speaking as a shareholder, I agree with you. I'm going to hang on to the shares that I have because it does feel like, $99 is going to be basically the worst case scenario. I don't anticipate any type of regulatory issues with this acquisition. Ellie Mae is still a fairly small company in the grand scheme of things. I'd love to see a competing bid come in there. I'm not really sure I'm counting on it. But I think, in just around a few weeks or so, we'll have our answer one way or another. But yeah, like you said, it's no real cost in hanging on to that position and just in waiting. I mean, I guess everybody could sit there and argue the opportunity cost for being able to put that money to work somewhere else, but you got to have a better idea in the first place, Matt, and then you got to be right too. So sometimes that doesn't work out as well, at least timing wise. I'd say
at least hang on for the 35 days.
Yeah, I think you're right, and that's what I'm going to do, and I think that's what most investors would probably be best served doing as well.